Brian Trent. I'm a loan officer with Builders Capital based out of the Orlando, Florida area. And I'm coming to you today on a beautiful, sunny, very hot early March day from Palmetto Point Park in Eustis, Florida, where it's just gorgeous. I got a lake behind the camera there. I couldn't put the lake in the video just because it would backlight me, but I'm really excited. This is the very first video in my new YouTube channel where I will be discussing all things related to the construction financing industry. I have noticed in the past several years that I've been doing this that despite the fact that construction loans for residential projects can oftentimes be huge, millions and millions of dollars, and very impactful to your business, I've also noticed there's often a general misunderstanding or lack of information and understanding about construction loans. And so what I want to do is use this channel to educate you, prospective borrowers, whether you're going to borrow from Builders Capital or from somebody else, you should know how construction loans work. Everything from LTV to LTC to day one LTV and so on and so forth. But we're going to be talking about industry trends. I'll be interviewing various people and bringing you some insider information about Builders Capital itself. Super excited for this. Now, about 2 weeks ago, I went down to beautiful Fort Lauderdale, Florida to the home of Rob Trent, the CEO of Builders Capital, who also happens to be my brother, by the way, one of the smartest people I know, and I did an interview with him. So I'm going to switch over to that interview here in just a minute. I think you'll really enjoy it and find it to be beneficial for you. Stay tuned to the end of the video. I'll give you 3 reasons why you should finance your construction loan right now with Builders Capital. And before I go, please don't forget, like the video, subscribe to the channel, click the bell icon up at the top so you'll be notified of new videos, and stay tuned for the interview. You'll enjoy it. So, I'm Brian Trent. I'm a loan officer with Builders Capital, and I'm here for an exclusive interview with Rob Trent, the CEO of Builders Capital. And this is completely unscripted. By the way, he hasn't had a chance to preview any of these questions, but I wanted to take the time right now to learn a little bit about Rob and a little more about Builders Capital. So, with that being said, Rob, you started your career as a home builder, right? And in fact, you grew a company called SDC Homes to be the 3rd fastest growing company in the state of Washington back in 2009, 2010 time frame. And how did you do that? What made the difference between you, or what was the difference between you and the other companies that you were competing with that helped you to grow so fast?
Yeah, it was an interesting time. I think that for the most part, I found something that the market needed at the time, and try to deliver a manufacturing facility that was really efficient and interesting from a price perspective and feature perspective to the customers, and it was quite successful.
Those were fun times. It was interesting because at that time the economy was kind of in a recovery mode from what they call the 08 recession, depression, whatever you want to call it. In your mind, what does it take to be a successful home builder or real estate investor?
I think a lot of it is understanding your customer and then having a great team that supports you. You know, there's a lot of people in this business, and there's a lot of people that do it well, but ultimately it's connecting with your customers and, you know, satisfying their requirements and needs in an impactful way.
Okay. And Kurt Altig founded Builders Capital back in, I think it was 2009, right?
That's right.
Okay. And who was his first customer?
My company was, SDC Homes.
So that was probably kind of a big thing, certainly for Kurt and Builders Capital at the time. But why did you choose Kurt Altig and Builders Capital to be your lender at the time, and what made the company different from a traditional lending source like a bank?
Yeah, I think, you know, what I didn't understand at the time is more out of necessity than anything else. I think, you know, several of the local regional banks went under during the GFC, so my banks were heavily impacted. And Kurt came to me and was trying to raise funds to start Builders Capital, and you know, we thought it was kind of silly at the time. He did that probably in the worst time that he could, but probably in the time that needed it the most. So again, I started using Builders Capital out of need, but what I realized really quick was they were a lot easier to work with than the banks. They spent a lot of time to understand my financing needs and what it took to help make me successful. And it really played a huge role and impact in the growth of my home building company at the time. And you know, our relationship prospered over the years, and I think a lot of that still continues today in the way Builders Capital operates.
Yes, actually that's a good segue into my next question. I was curious, you know, how did Builders Capital and at the time Kurt Altig helped you to grow the company, because that's when you became the third fastest growing company in the state of Washington, right?
Third largest, but yeah. Kurt at the time and my other business partner Robert they spent a lot of time digging into the business needs. And what they're really good at, and what I think we're really good at today still, is really understanding and putting a product in place that's not just this box that is a cram down, like, hey, this is the only product we have and this is what we can give you. It's really custom tailored products to help those builders utilize that cash to grow their business and become efficient and profitable.
Over time, Builders Capital grew, and then you eventually sold STC Homes, right?
Did.
To a national home builder, and then you became initially an investor, and then I think it was 2019 or 2020, you became CEO of Builders Capital, right?
2020, right before COVID.
Yeah, 2020.
Kurt timed that well.
Yeah, he did. So Kurt stepped down. He's the chairman of the board right now, and still heavily involved. But you've been running the show. So obviously you took over the company at kind of a challenging time as we were sort of recovering from COVID. And what were your goals back in 2020?
Well, I think first of all, Kurt did a great job of building this company from really 2009 to 2020, and kudos to him. He's got a great team that he had in place, a lot of good processes and people. What I focused on and what we realized was a larger opportunity than I think we realized prior to that is this opportunity at a national level to penetrate the market a lot deeper than we previously were, to institutionalize the business from a capital perspective. So my focus was really on scalability and growth. And having scaled a previous home building company, this really was a great fit from my previous experience. We added technology in a huge way, built our own technology from the ground up, added some great people, a great team in place, and started to add our building products or our finance products throughout the country, which prior to that we were very regional, Washington and Oregon, Idaho.
Or in particular, what possessed you to become CEO? Or how did they convince you to do it?
Well, I love the grind and I love growing businesses, and I think I saw a huge opportunity to take what we had at the time and become really a market leader and first-in-class business. And I think we've had a lot of great success in the last 3 years. From all the metrics we have, we're the largest private finance company across the country, and we've got a lot of great customers that support that growth. And we're only tapping the market share. We're less than 0.5% of total market share. So there's another huge opportunity out there to continue to grow the business, to continue to give our borrowers and customers great lending products to help grow and scale their businesses as well. Okay.
And you touched earlier on information technology and I guess the place that it holds within Builders Capital, and you've invested a lot and put a lot of time and effort and energy into the information technology backbone of the company. We acquired and are growing BIMquote and Custom AI. We've got a very powerful back office solution. Talk to us a little bit about the technology and why that makes Builders Capital different and how it impacts our customers.
Yeah, there's a few different things that I love about technology. Technology allows you to scale a business. You always have to have human capital to grow and scale a business, but you can leverage that so much further with technology. So we're a very data-centric and data-driven business. We make decisions driven by data, which I think is really important. We analyze all of our data, frequently, multiple times a month. And so from that perspective, it really helps us understand the business, helps us understand where we can gain efficiencies, where we're inefficient. We can measure, our employees' growth or scalability. And from our customers' perspective, what it does is it creates access for them to use technology in a way that creates less friction in the process. It also, we help to enhance and encourage, human behavior through technology. So if we can have easily understood, repeatable processes that technology drives, has a lot less impact or opportunity for mistakes on our end as a lender. So it impacts the business in all ways. We've got outward-facing portals where borrowers can do anytime draws. They can do online loan applications, full digital. They can really start and stop that complete loan process with very little human interaction. And then, of course, we have great teams and people behind that help enhance that process even further. But technology really is it's a scalable solution that we've spent a lot of time and money procuring.
Okay, and talk to us a little bit more about BIMquote in particular. This is software acquisition, right? We brought them into the organization. How does BIMquote benefit our customers?
We always want we want to have an advantage in the market that other people either can't do or have a really hard time competing with builders capital. And it's always in the spirit of being the builder's best relationship or most trusted lender. So BIMquote is really a tool that is really a piece of software that helps our customers become more competitive in the marketplace. It gives them a better understanding of their plans that they're building, of their cost. It'll render their plan. It'll spit out a detailed cost breakdown materials list, and this is all done through the power of software and artificial intelligence. And then we've got it linked up with national suppliers, and those national suppliers look at our portfolio as a whole, which is about $5 billion right now, and gives us this pricing discount, the same as a public home builder, almost like a D.R. Horton or Lennar, what have you. So what we're allowing our borrowers to do now is become competitive at a much smaller scale to compete against those publics, which gives them kind of an upper hand out there in the marketplace. And we're passing through those cost savings to our borrowers, and it's been quite successful thus far. Still has a ways to go, but we're really excited about the opportunity that's going to bring to our borrowers.
Well, the last I heard, the feedback that I was receiving from borrowers is that builders and investors that are fully using BIMquote are saving as much as 10 or 11% on materials on their projects. In fact, I know some of my large clients are converting their whole business over to work with BIMquote and custom AI.
Yeah, we've had a lot of success. We've done some test cases with, 20, 30 borrowers so far, and in almost all cases, we've been able to save them a significant amount of money on the materials they're ordering through us. So the goal is to make that, again, frictionless, where they can come in and use that platform and make it really easy and user-friendly. But overall, the goal is to save our borrowers 10 to 20% on their material and labor cost of their house, which I think they'd be really challenged to get anywhere else. And
it offsets the cost of their capital, really. I mean, we're in a market where capital is becoming more and more expensive, and so every dime we could save borrowers is I think critical to their business and very helpful.
That's right.
So on a slightly different topic, Builders Capital has always been exclusively a residential construction lender, and we tend to focus on things like townhome projects, condominium, small to medium condominiums, I would say, and of course residential development projects, single family in particular. Why is this? Why not take on commercial or retail? I mean, I get calls all the time from prospective borrowers that want to do a big mixed use or want to do other types of projects. Why focus on residential only?
Yeah, I think we're really good at knowing who we are and who we want to be. We've got 2 of the 3 partners have extensive development and construction background. The other partner's got extensive mortgage background. The name Builders Capital is very purposeful. We want to lend money to builders, but the project types, we're very comfortable with our SFR developments, SFR ground up construction, and condos, multifamily. We just don't want to get into the commercial space and be a lender that tries to do everything. When you try to do everything, you can't do it very well. When you really specialize in certain things, I think it really allows you to be a market leader in that space and understand your borrower from a unique perspective that other lenders find challenging.
Builders Capital services all of its loans in-house. The draw disbursements are in-house, legal's in-house, we have a closing team in-house, you name it, it's all done internally. I think at one point, if I remember my history a little bit, the company actually tried to outsource servicing at one point and didn't feel like that was a good move for our customers. But it's obviously something that's very costly. It adds a lot of overhead to the company, and we have to add staff to do it. But why do that? What's the difference? A lot of other lenders are outsourcing the servicing, right? Somebody closes on their loans, and then their note gets sold to somebody else, and then they are turned over to a call center someplace with some third party. Why does Builders Capital service in-house, and what does that mean for a borrower?
Well, I think at the end of the day, it's all driven by experience, customer experience. We did, in fact, sell close to 100 loans to a servicer, I think back in 2018 or 19. and we ended up buying back all of those loans to maintain the servicing. And the reason why is the relationship with the builders, very valuable and important to us. We want that customer to have a great experience and come back and repeat and continue to borrow from us. And servicing allows us to control that process. So it is extensive. We have a lot of people to support that, but if we're not understanding the struggles and we release that borrower to a third party where we have no control in that experience, unfortunately it still reflects on us as the lender. So we didn't want to allow that to happen, and a lot of our institutional capital sources fight to take that servicing and place that with a third party, and thus far, and we'll continue to fight that, we have not released any servicing. We service all of our own loans, we maintain all those relationships, we facilitate every single draw, and I think we're one of the few lenders, especially at scale, the size that we are, that still do that.
Okay, all right. So I think that the biggest asset that Builders Capital has is the people, and we've got a relatively sizable organization with a headquarters over in Puyallup, Washington, that's just a little bit south of Seattle. But we've got some great people. In particular, I am highly confident that I have the best sales team in our company, and I think overall our sales team has got to be the best in the industry, and I'm very, very happy with it. But talk to us about the culture at Builders Capital and the culture that we're trying to maintain, and why the people at our organization make such a difference in the relationships that we have and in the experience that our borrowers have.
Yeah. I think with any company, the company is really just a shell, right? That what makes a company successful is the people within it. And we've spent a lot of time trying to find the right people, and I think we've done a really good job of hiring. And our culture is really, team focused. I've been in a lot of organizations, and I'd say without a doubt, Builders Capital has got the best team-oriented culture that I've ever seen. And it's people wanting to help other people within the company to be successful. And that shines through to the customer experience. We receive emails from borrowers all the time and brokers that, hey, I've worked with a lot of companies, and by far, this team I've worked with is the best in the industry. I've never experienced anything like it. And it's really exciting to hear that. And we're starting to hear it more and more, which is even more exciting. But, the people make the difference, and that's easier to say than it is to do. But, like Brian said, we've got, as far as I'm concerned, the best sales team out there, the best support team out there, the best servicing team, the best closing team, and we really are first in class in everything that we do.
Yeah, and I second that. I've been with a number of organizations. I came from the home building side myself, and I've worked for National Public, home builders, and a number of different companies, and I think the team that we have is phenomenal. I never have an issue with getting people to pitch in and help out and want to make sure that our borrowers are having a really great experience with us. And lending should not be something that is super stressful. There's a lot of stressful things associated with owning a home building business and building homes, and the finance side, in my opinion, should not be the biggest challenge in your life. With that said, obviously there's other lenders out in the market, and it's interesting because lately, since rates have been going up and the market has been kind of in flux, I would say, occasionally I get calls from people, and they'll tell me something like, hey, I closed with such and such other lender and went to take my first draw a few weeks later, and they told me that they couldn't sell my note and that there's no capital to fund my draw. What do I do? And I hear that a lot, more and more over the past, say, 6 or 8 months. But it's pretty common for lenders to sell their debt on the secondary market after they close a loan. And Builders Capital doesn't really do that. We raise capital through securitization, and we raise capital before we go and close on loans. So, why do we do that? Why does that matter, and how does that benefit our borrowers, especially from a risk perspective?
I'd say one of the most unique things about our business is the fact that we do that. I'll give you an example. A lot of these smaller lenders out there, they're selling to what they call aggregators in the marketplace. So they'll put together this book of business, whatever the size could be, from $10 million to $100 million. And they'll sell that to a secondary market. And these aggregators will then take these loans in larger portions and try to securitize those. When it works great, that's fine. When the market's in turmoil or has any kind of softening like we've seen recently, and we've seen multiple times. You look at COVID, And you look at the beginning of 2023, I think it started about April or May. What you find is instantly the aggregators pull back and they stop purchasing.
This is Felix, by the way.
So what happens when they stop purchasing is exactly like what Brian said. It leaves that lender with a book that they then can't deploy the peak amount of capital that's necessary to fund draws and fund that loan in its entirety, which is obviously frustrating for borrowers. They went out and they spent all this money to place this loan with the lender. Now the lender says, hey, you came to take your first draw. I can't fund it. These guys, I planned on selling this and they didn't buy it. We don't ever want to be in that position. So like Brian said, we're funded just like the aggregators are with these large securitizations. We're also funded with major life insurance companies, and we have other funding sources as well. So we go out and we place this capital, and we actually take this capital and pull it down before we start to fund your loans and your draws and everything else to make sure that we have that money in place. We also have long-term stable capital. Our capital is in place from anywhere from 3 to 5 years. So again, we don't have the risk of this market volatility and cycles to where we might be impacted by market conditions. So again, at our size and scale, having capital in place and having long-term capital that's resilient to market conditions is quite unique in this space. And unfortunately, the borrowers that have discovered that the hard way should come see us, and we'll solve that solution for you.
Well, and from what I hear, we've also got a really positive, trusted relationship with our capital partners. We've weathered the storm and several times throughout the life cycle of the organization, and have always made the right decisions as a business.
Yeah, we've got a really experienced executive team. Several of us, and probably most of us, have all been through multiple market cycles. So part of that data collection isn't just within our own portfolio. We're constantly tracking macro and microeconomic market conditions, reporting on it internally, and trying to discover should we be foot on the gas or slight pullback and kind of wait the market out and see what's going to happen. But it's allowed us to be really resilient through these market challenges, and our capital providers love that. Obviously, we're at times we're risk adverse when we need to be risk adverse, and we're very strong in terms of when the market's recovering, we're foot on the gas and we go really fast, and I think we've got a proven history of that. So to Brian's point, our institutional investors and securitization market and everything else, they look at the track record of default records and successful payoffs and everything else, and we've got some of the largest relationships in the world in terms of people that are funding us. And the fact that they want to go deeper with us and continue to fund is a great example of that strength that we've shown over the years.
All right, guys, what did you think about that interview? That was pretty good, wasn't it? I told you that if you waited to the end of the video, I'd give you 3 reasons why you should finance with Builders Capital right now. Now, first of all, Builders Capital can finance your townhome project, your single-family ground-up project, your condominium project, and also development related to those projects. We've got some great loan programs. So number 1 reason that you should finance right now with Builders Capital is that we have loan programs that nobody else offers, and we have flexibility in our loan programs that nobody else offers. So no reason to wait. You can keep looking if you want, but make sure you get a quote from me here at Builders Capital. You can contact me by making a comment or by sending a message to me, whatever works for you. Number 2 reason is that rates are going to go down. If you do your research, even just a quick Google search, you will find that everybody in the industry, all the finance experts, everybody, the National Home Builders Association, they're all anticipating that rates will start coming down by the end of the year. In fact, I read a statistic, or I guess it's really not a statistic, it's a projection that generally speaking, the industry believes that mortgage rates will be in the low 7s by the end of this year, by Q3 and Q4. So if that's the case, that means there's going to be a spike in demand, and we already have a lack of inventory to manage or to meet current demand. So if you start building today, then you'll have your project finished by the end of the year when demand starts to spike for residential projects. So that means that people that have been waiting to buy because of rates, they're going to start buying. And if you don't have your project ready, you're going to miss that wave. And number 3, Builders Capital has a variable interest rate. Now, when variable rates first started coming out with Builders Capital back in October of last year, when we converted from a fixed rate to a variable rate, Honestly, I was a little bit skeptical and nervous about it myself, but what I've realized is that if you close on your loan right now, number one, you're only charged interest on the balance of the loan, not on the total overall loan commitment. And number two, when mortgage rates start going back down, the SOFR scale also will start going back down, and so your rate on your construction loan will also go back down. So there's really no reason to delay. Finance your project today. Give me a call, send me a message, whatever works. My cell phone number, my personal number is 352-800-9000. How many people give out their personal numbers on a YouTube channel? Call me today. Thanks a lot.